morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Monday morning pre-market webcast. Okay, S&P 500 E-mini futures. Here's the daily chart. And what we saw last week was we saw a bounce down at 18. We've done the lower Bollinger Band ride. We had tight bands through, essentially through the Scotland independence vote, which popped that Thursday night, topped us out. We broke back through the middle band, and then we did essentially an 8-day lower band ride that then bounced at 18 and finally got back above the lower band, out of this channel and over the highs of the previous day, and closed over the highs of the previous day. So at this point, the band ride is over. And what we're seeing this morning is we're seeing some follow through by the bulls. So far, let me tighten this up. So far, that follow through is stopping at the 50-day exponential moving average. And what I told my subscribers last night, we were talking about some either or scenarios. And the first one is either the 50-day is going to act as resistance, as it did for these 3 days here, 1, 2, 3, or it's going to break above and we're going to get back to the middle band, the 20-day simple moving average, which acted as resistance here and here. This action from the close on that Wednesday, on the 24th, to the Globex open and fail on the 25th, where we died at middle band, that confirmed two things. It confirmed the sell rallies environment, and it confirmed a deeper lower band ride. So retesting the middle band is critical. If it can't do that, if the best it can do is the 50-day exponential moving average, then we're going to have a pronounced lower high versus 2014 half, especially if we break back below 1918 quarter. But that's a couple steps away. So right now we have to see, what do the bulls have in RTH today in the regular session? Can they get over the middle band? If they get back over the middle band and close over the middle band, my suspicion is that you're going to see another run at the highs, because that will bring all the dip buyers back out. It will feel very similar to the other rallies we've seen in 2013, 2014, where there's a dip, it gets bought, the bears have a chance to turn the bulls back at a number of key areas. The 100-day, the yellow line, that didn't happen. You've got the 50-day and the 20-day. If they failed to turn them back at those three areas, then the next natural area to turn them back is up at the highs. On the other hand, if we fail at the middle band, then the mini has decided that it wants to trade between the middle band and the lower band. And that for us just has a very basic rule of sell rallies. So for our part, we are still long some from 1922 half. We have sold a lot of that, taken a lot of profit, but we have a little bit left. And I'm content to leave it alone until we get up to the middle band and the market decides what it wants to do. That doesn't mean I'm automatically going to dump it at middle band, because what if the bears do what the bears have done so many times before and just let them go through? Then you've got a much more potential to the trade. So we've rolled our stops up to 42 half, locked 20 handles on the trade, and we'll continue to roll things up as the bulls continue to push higher. So we're not making any assumptions at this point. That's just some key areas on the chart that we're looking at. Okay, that's all I got. Everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Come check out the website, Princetontrader.com. Come check out the chat room. We would love to meet you. A lot of new people have started. A lot of new people are still on trial. A lot of trials have recently converted to new members. So it's a really good time to start, because you'll be learning along with a lot of other people. I'll be back tomorrow morning with another webcast. Trade them well, everybody.